You're putting new money in. We think value is the place to go. We think if you've been fortunate and you have a lot of growth stocks, now's a good time to start rotating some money toward value. And that's like the laggards, the good businesses, but at 9, 10, 11 times earnings.
Okay, now it is 5:30 here on the East Coast, a little bit early, all right? So we try to avoid words like standard deviations. However, one index you look at suggests that growth is just a little bit out of whack against value. Tell us.
Right. So if Bloomberg looks at the price of the S&P 500 growth index versus the value index, and if you look at that over the long period of time, generally they're at about 1.0. Today it's at about 2.5, which means it only gets that expensive about 2.5% of the time. So it's approaching where it was back in 1999 and 2000, and that led to a very good period for value. We just don't think growth is going to sustain up here. If you look at some really good growth funds, they're up about 40 or 50% in the last 2 years, where value funds are up about maybe 10 or 15%. We just think there's going to be a reversion to the mean where growth does less good, value does a lot better.
Yeah, I mean, either one of the two then is either growth is completely overvalued and out of whack, or value has been ignored and left on the scrap heap. Which one do you think that it is?
Somewhere in between.
Or maybe somewhere in between. One's too much, too loved, the other one's not loved enough.
That's exactly it. And you can have an environment where growth does okay, but value does a lot better.